Joining us now is Lord Adair Turner, Director of the Foundation for Science and Technology. Of course, he was Chairman of the United Kingdom Financial Services Authority during the crisis. He took up the post in September 2008. I guess the timing couldn't have been better for you at the time. Do you remember when you realized the scale of what was going on in that 08 period?
Yes. I mean, I became Chairman of the FSA on September the 20th, 2008, which was 5 days after the collapse of Lehman Brothers. One obviously knew then it was big. I think I only realised how big it was over the subsequent 5 days, because, of course, what happened was that the collapse of Lehman Brothers, the collapse of a major broker-dealer investment bank, and what was then occurred, which was essentially a run on repo, a huge collapse of liquidity in the secured funding market, then spread over the subsequent week to the guts of the global interbank money market. And we suddenly had major banks in the world not willing to lend each other money, even overnight, because they were worried about who was solvent. And it was at that stage, which was really about September the 21st, 22nd, 3rd, etc., as we went into the subsequent week, that we realised that the whole thing was just seizing up. And
so your initial moment was, OMG, what do I do next? Or what was it?
Well, interestingly, you sort of know what has to be done. I mean, I remember sitting down with Mervyn King. We had dinner together on the night of September the 23rd, and it's pretty obvious that there are three levers that are available in that circumstance. There's either central bank liquidity support, that's what central banks are there for, or there are government guarantees of the liabilities of the banks, or there is recapitalisation of the banks. And at one level, you don't need to be a genius to know that you've got three levers, and everything is about what is the balance of those levers. And that's what we were working on over the subsequent 2 weeks in the UK in relation to our banking system and others across the world. Those were what the debates were about.
So with hindsight, should the UK have done anything differently?
I think, if anything, we should have... I think maybe we should have just nationalised HBOS rather than merge it with Lloyds Bank. I've always thought that. But, you know, that had actually been agreed 2 days before I joined. You know, maybe we should have challenged it and gone back the other way. I think, if anything, we should have gone earlier for bigger equity increases in the banks. I didn't know that then, but I ended up as a super hawk on banking capital. I think we were allowing the banking system to run before the crisis with ludicrously low levels of equity capital, and in the debates subsequently about the Basel III reforms, I was always a hawk, but a hawk then meant bringing it up by another 0.25%, another 0.5%.
Super hawk.
But you know, look, I think the banks ought to run with equity ratios of 20%. I think we've got it fundamentally wrong. On the other hand, we did some big things. I mean, the capital ratios of the major banks are now effectively about 3 to 5 times higher than they were before the crisis.
So what do you think the main consequences of the financial crisis and the Lehman collapse are? I mean, you know,
well,
regulation of the banks, yes.
Well, the consequence was the recession, the global recession of 2009, which I think, and the incredibly slow recovery. And that was really a consequence of two things. One, that there was a huge financial crisis in 2008, and two, that came at the end, not just of 5 years, but of 50 years of the growth of leverage. And my own thesis is that we now have to focus on leverage in the real economy as being our big challenge today, rather than the financial system itself. I hold the somewhat unfashionable point of view that we probably are much safer than we were in 2007 and 2008 in relation to the financial system itself, but I think we have huge unresolved issues in the global economy about our reliance on debt. And debt to GDP across the global economy, public, corporate and household together, is now higher as a percentage of global GDP than it ever was before.
So, Lord Turner, are you telling me that actually the reliance on debt worldwide could lead to the next crisis?
Yes, but I don't think it's going to be a financial crisis. I don't think it's going to be that we're going to suddenly wake up and find that, you know, one big institution has gone wrong and then we're all terrified about which other dominoes fall over. I think we put enough capital into the banking system to avoid that danger. I think the bigger concern is that we get a downturn in the global economy, perhaps because China tries to get its high leverage under control and deliberately does it as an act of conscious management, that there's a slowdown in the global economy and that we then start with a major downturn, but we're starting with interest rates of already very low, even in the US. You know, we're still only talking about 1.75% there, and still close to zero everywhere else. And if we get a major turndown in the global economy, are we going to be able to react with the interest rate cuts and the fiscal stimulus that we responded to in 2009? We've used a lot of the ammunition already. So my worry is more about debt in the real economy, households, corporates, leading through to a slowdown and the difficulty of responding to it, rather than any one institution suddenly going bankrupt.
I mean, it's all about timing, right? It depends on whether you're expecting the slowdown to come before interest rate normalization.
That's right. The issue is we are having clearly a global recovery at the moment. It's very important to realise why it's occurred. It's occurred because of massive fiscal stimulus. I mean, China took its fiscal deficit from about 1% of GDP in 2015. It's now running at about 4%. America, which had slowly been, US, which has slowly been bringing down its fiscal deficits, has now completely reversed that with the Trump cuts. And that has taken, you know, the fiscal deficit is going to reach 5 or 6% of GDP. I mean, it should not surprise us if there is a boost to the global economy, if the two biggest economies in the world both increase their fiscal deficits by 3% of GDP. This must be the biggest fiscal stimulus that has just about ever been put into the global economy. Now, the danger in the US is that for the first time, I'm beginning to think that that might produce inflationary pressures and therefore a faster increase of the Fed funds rate there than, you know, than some of the...
Which would be a good thing, because at least...
It would be. I mean, it would suggest that we are returning to normal. On balance, I suspect that isn't going to occur. I think the deflationary forces in the world economy are still very deep, and I still think we're not quite sure how to deal with them and with the large debts. And clearly, one category of debt, which is emerging market dollar-denominated debt, is already producing very major problems.